The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on the 7th day of May. My pleasure to be here Monday through Friday, noon until 1 p.m. Eastern Time at 877-927-6648. Hey, how about that? Thursday, sharp move down, reversal, closes fractionally higher. Friday, opening, slide, and then boom, buying comes in, closes sharply higher. That was important. That turned the 23,300 to 23,500 area into very, very important support. And one of the reasons why for subscribers on Friday, although I was out of town, well, I left straight after a very, very early send-off to my opening call newsletter. One of the reasons why I was looking at the market positively, and we had a little strange situation occur, because normally my Traders Corner, the last page of my newsletter with all the positions, goes out at 8:35 in the morning Eastern Time. So that would have been after the jobs report. But I had to leave very early, so I think it was 6:30. Anyway, we left. I sent out my newsletter about 6:30, and what I said is that we do not want to buy a rally and chase the diamonds. We wanted to buy it beforehand. So I had a buy on the diamonds. If you had bought it soon after I sent out the newsletter, which was very early, probably 2 hours earlier than normal, then you would have lost $1. But if you bought it based on my newsletter going out and this particular page going out at 8:35 or maybe just before 8:30, you would have got a fantastic entrance on the Dow Diamond. So we have a mixed performance where some subscribers were stopped out for a 0.5% loss, and others got in perfectly and are in looking very good. We have added to that position, and we've added another long position, and here's the reason why. You see the weekly chart of the Dow. Let me just give it to you right now, IDU. You see the way you've made this arch formation in the weekly chart, having gone from the 26,626 high of January the 22nd, peaking in the Chapman Wave methodology, straight down to 23,360, rallies strongly to 25,800, come back to a higher low, and then bounced, and then went to 23,344, a fractional lower low, then rallied again to the 24,850 area, and on Thursday actually, made a higher low, this time 23,500. That's saying to me that there's a really good chance that later on, maybe in the summer, or maybe late summer or something like that, we could come back and do could be sooner. We should be coming back to test the 23,300s. We might even, if you hit it enough times, go below it. The way I'm starting to look at the market, and this is the very first time I had some good questions over the weekend. Let me just get this one question, which really summed it up very nicely. Right here. So the question is, it would be great to hear your thoughts on your target of the intermediate term low on radio show, another H pattern in weekly, or do you feel Friday's bounce could be the intermediate term low? So that's a really good question. And the more I looked at the charts over the weekend when I had time, and then on Sunday I had quite a bit of time, the greater the conclusion was that we have rotated through different sectors, both in the correction and in the longer term correction of indices that have really taken months to consolidate. And what I'm really looking at here is that, yes, there's a really good chance that we're going to make lower lows. I'm not sure at this point whether it'll be 5% lower than the 23,300s or less or more. I'll have a really good feel for it by the end of this week to see where this rally goes. But what's really important is now I can go to the nitty-gritties, and as I do it, I'll discuss things. So the answer is, if you are a very long-term, buy and hold person, and you've lightened up a little bit, and you're looking to see where you could add back again, I'm going to say that within 1,000 points of our multi-week low for 2018, I'm going to recommend that if you want, you could just start a very small position on the long side. I don't think it's the wrong side. I just don't think it's the correct timing. But I do think in terms of looking out, because there should be higher highs in 2018, I'm thinking that as a feeler for a bigger position later on, buying here at 24,436 in the Dow, 2670, let's call it 2680 in the S&P. You could even put a stop on this position, but it's a position that I would say is one that's going to give you a really good sense of looking out, because believe me, with what's going on in this administration, and it could be any administration, just happens to be at this particular time in this administration, with tariffs, with all sorts of things, there is enough there to say, even if there's a very strong rally, there's a real good chance we're still going to do the chop, chop, chop sideways action with sudden deep corrections and then bounces. So the trading range, I think, is in force still. On a short-term position, I think that we're going to have a rally, and this rally is going to tell you a bunch of things, and I'll go into that as we move along. So the Dow is up 171, 24,433. The real next resistance is the 24,490s, and then 25,100. If we can get to 25,100 by the third week of May, let me give you a date. If we can get there between the 18th and the 25th and hold, that's going to be one thing. If we rally and then we start to really bump into resistance and then we start to make another arch formation, that's that choppy sideways action that says, oh, start getting ready for another pullback to retest that 23,500 area. Okay, so then with that said, the key support in the short term, we're at 24,435. Key support is at 24,100. S&P, SPX.X. S&P up 0.61% at 2679. Dow's at 0.70. It's trading up 16. And this is a little bit better action than the Dow. MACD's good. Stochastics turned up nicely. On balance, volume's quite good. Support is at 2657 to 2653. But if the S&P is able to trade even one tick in the 2701 area, I'm going to say that's really good action. We should be testing the candle high of the 18th at 2717 in May. Isn't that interesting? We'll go to the rest when we come back. No rush. Beginning of the week, we need to plan our strategies very carefully here. Dow's up 174. Basil Chapman, Tiger Technicians Hour. I'll be back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to Options Expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
So let's see, the QQQs are up 1.05% at up 174 at 166.61. Now, this is in a leg D. In the Chapman Wave methodology, it's made a cup formation, making kind of a handle. Couple of things going on. The MACD is strong. Stochastic's good at 63%. Not great. On balance volume is not too great. But the weekly chart, it's very important that this rally continues, possibly to the 168.50, maybe even by Wednesday or Thursday, touch 169 to 170. That'll be I don't know. I'm getting a little carried away. Yeah, but if we can do that this week, let's say this week, that makes the weekly chart improve to the point where you've gone above 167 round number high. That would be a leg B, a gray leg B in the weekly chart, not the point. The point is it's really improving the monthly chart. So this is a very mixed market in many ways, and I'm looking at this and saying Thursday and Friday's action, especially Friday in the QQQs, was extremely good, especially the SMHs, and the SMH right now is up. SMH right now is up 0.88% in a leg B, gray leg B. Very good action because it broke the trend line resistance, and the day is young, but it'll be very nice if it can close above. It's at 101.71. If it closes above 101.60, that'll be nice action. Improve the weekly chart and your leg C in the 120-minute chart. So these things are all coming together to suggest that the speed with which we turned around both Thursday and Friday, the strength of the closes, as well as follow-through gap up this morning, that to me is really important action. And it's improving the daily charts, which means that, yeah, in a way, the weekly charts, which are WEAK, very weak, are improving. They take the longest to heal. And the monthly chart of the SMHs has improved. It's still a little bit negative, but it has improved because we're way above the 9-period moving average of 98.75. So that's the reason. So yes, to answer the question Kevin asked about looking out, and now I just got two questions. The first question said, SPX, do you expect the S&P to make high for month this week or rally into end of the month? And then a very next question by a different person, Bob asked, so that was GT. Bob says, SPX, is this another rally that will fail like in April? So the answer to both questions is yes, I do believe that the S&P will fail, but fail would mean that it goes underneath the February low. And at this particular point, all I can say is more likely we're looking at an H pattern. I don't know yet about the retest. I do see a test in the area, but an exact retest and the SPY, the S&P trading vehicle, the depository receipts of the low that was made in February at 252.92. That we're 15 points higher. Whew, yeah, real bad news could take us down to the two. Let's just say yes. I think we will test the 250s. I don't know yet whether we're going to break down. Why? Because those monthly charts are still holding really well. It's really important for me to look at the big picture, and that's the reason why I'm saying if you're a longer-term investor, you can start a position, even here, saying I will put a stop in this position, but it'll have to be fairly wide. I'd have to give it maybe 3%, just for the moment. I'll change that as we move along. And the higher you go, the greater the chances are that you're raising the base of support. That's really the way I want to look at it. And if we do have a big correction and yet the position that you got doesn't get taken out from 24,450 now, and then we get a really good buy signal for whatever reason from higher highs, that'll be fantastic. I'm just saying this is the time to be sort of ready for it. Don't get carried away. I'm only saying that it's a position that allows you to get in with a little bit of comfort, but not too much comfort, because it would be for the longer term position. I do not want to take an 8% decline in a position, even though I'm expecting more than an 8% increase from where we are now as we go into year end, or at least the beginning of the next year. So I hope that's getting clearer. So the IWM is the one that we were looking at on Thursday, and I said, yes, it's holding nicely. It's not breaking down, but it's not yet breaking out. Well, right here is a very nice move. It's up 0.96%. This is one of the better percentage movers, up $1.47 to 157.21. And it looks, I've drawn the cup formation, it looks like it wants to test and break 158.38, the high of the 18th, which was peak C, gray peak C, and that'll take you to a blue leg D. And that'll be very important. Why? Because it actually increases the strength in the weekly chart. You might even get the MACD to cross positive and the stochastic is 71%. Maybe we could get to 76%. And the monthly chart is looking much better. So here we are with the IWM not breaking out, but having a very good session, showing in a sense that it's the leader here. And we'll talk about that. Maybe tomorrow I'll talk more about the small caps. I don't want to take the time right now to talk about it, other than to say I want to look at this in terms of the XLK, which in fact, surprisingly enough, on Friday didn't have such a great session. On Thursday did not have a great session. Had that session on Friday, and today it's breaking out. 68.36 is the high today, and 68.29. So this is a leg D. Doesn't make a D a negative, because it means now, look at this, you're at a D already, and the others are only in Bs and maybe Cs. Well, not really, because there's a second cup formation. This cup formation could be much greater than the previous one. So far, this is very good action in the XLK. It wasn't so great the other day on Thursday. It made it up on Friday and today. So SMH is still doing nicely, up 79 cents. Here's the thing that I want you to look at. Look, gold was a little weaker earlier today. It's still down half a point at 13.14. I have to tell you that the 200-period moving average in the monthly and the weekly chart, that was my target in the 1305s area, which we broke, which we just broke a tad last week, then tried to rally. That's still, to me, the magnet. Now you've got to find power to break away, to turn into a propellant instead of a repellent, and that's going to make it, in this particular instance, I don't think unless you can get above 1330, you're at 1315, so you need another 15 points. You go above 1330, that's going to be really nice action. But wait a minute, silver Look at the weekly chart. You see it's making lower lows, made a leg C, maybe a trough C this week. So far, it's a leg C. Silver is doing nothing. It's down 4 cents to 16.51. Kind of stuck. Weekly chart, kind of stuck. Silver needs to get to 16.83. And then I'm going to say to you, aha, finally, silver is using the low that was made 5 days ago as a springboard. Otherwise, it's just going to turn into a magnet. You want to come back down to that level of the 1620s. High-grade copper. High-grade copper, same sort of thing, chug, 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 in a trading range, in the lower range, not doing anything at 308. At 323, I'd even say 317, I'd be a little bit more impressed. At 3.08, it's just kind of sluggish action. I want to get to crude oil, and then I'm going to talk about the dollar. Crude oil is up again, it's up 82 cents. Spoke about the Chapman wave, store plate formation. We'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. So let me just go through this. Heating oil right now is up at 217, up 0.023. I'm calling this a leg F. It could have recycled. It could have done a bunch of things. I don't see this as a brand new A. I think it's more likely an F, and we should maybe you go to a G and then pull back and just consolidate sideways. Leg C in the weekly chart, leg D right at the 200-period moving average that it hasn't been at since 2015. Heating oil acting very, very well. Crude oil right now is up up 79 cents, up at 1.13% at 70.51. Here's a Chapman wave stalk leg formation. I discussed it last week. And what's really important about this is that it's gone to a leg D above trend line. Now, what I like to do is I grab the trend line and I do another one. And I call it an outside line. This is a Chapman wave. There we go. Make that green. Right there, make that red. And what you have, very simple technique. Look at that. It's giving you parameters, and it says right here at the high today of 70.84, we're down just a little bit from that high. That is giving you a sense of the Chapman wave inside track. Whenever it's got into this area, that's when it starts to reverse. The MACD's made that double hump that I always talk about, like an M formation, and it's going for the second arch on the right, and that says, yep, that's good, but it could be limited to the upside, and then come back with the green line, the 9-period differential, testing the red line, and that'll say, okay, be careful now. Stochastic's way under 80%, it's 73%. On balance, volume is at a high. It's very strong. So this is saying that crude oil needs to be watched for the next 3 sessions. I would not be surprised if crude oil starts some kind of a correction by Tuesday afternoon, Wednesday. Just sideways correction at this particular point, unless it hits 72 in the next 2 days. That'll be amazing action. So that's that. I got now the TLT. Oh, I didn't do the dollar. I said I'd do the dollar. The dollar is right now up 16 cents at 92.72, having made a new recovery high. Just like crude oil, I'm calling this a leg F to the upside with a new high of 92.97, a new recovery high, that is, of 92.97. So we've been long since the 6th of April at 90.02, equivalent based on the UUP. The stochastic is strong at 93%. On balance volume, there's none here because that doesn't have volume. But the relative strength is fading a little bit. Still good, but failing. It's lower than it was 4 days ago. MACD is huge, very strong in the daily. The MACD and stochastic in the weekly chart improving a lot. It's testing the 200-period moving average. I think left side, right side price, time match, inside wedge resistance. This is the area that I would anticipate the dollar has a little bit of trouble while it takes a breather. Trouble meaning it needs to just have a rest. Leg A, gray A in the monthly chart. Yeah, I think there's a good chance that the upside is limited, maybe 93.20s. But in the meantime, I think it's the 92.25 to the 91.80 area on the shorter term that I'm looking at as some kind of support that might have to be tested. Okay, I've got a whole bunch of things going here. It's the TLT that we need to talk about because the TLT is down 20 cents, stuck in this range. You want to look at something very interesting. I'm going to pull this up, and while I do that, I'm going to talk a little bit about yields. So the yields are at a high level. They haven't broken out, but they haven't broken down. In other words, they've had a very strong move, the 30-year, the white, the TYX, the brown, the TNX, 10-year yield, and the 5-year FVX yield. What we're looking at is holding steady, up 10 cents at 31.25 on the 30-year, the 10 years holding, and the 5-year. If there's a high-level consolidation, it's going to make it really easy to have one quick pop to the upside again. That's going to be really interesting because it could have started a new name count in the Chapman Wave weekly chart. I show this to subscribers to my opening call every weekend, and I'm saying to them, yields have not broken out in the historic sense. When I say breakout, I mean that the 30-year already goes from 31.24 right now into the 32.60, 33, 10 area. That'll be just a huge breakout, and for sure, the 10-year will be at, instead of 29.55 right now, it'll probably be at 30.80 or 31.20, and the 5-year will be even higher. And that would be quite a significant thing. That would be breakout material. And let me make it clear. On a weekly basis, if there is a breakout to the upside with new recovery highs this week, I just don't know if this is the week to do it, but if there is, I think that will impact the market a lot more than other things. That's number one. Number two is I don't think it's going to happen this week. I think it's a little later on. Maybe in about 3 weeks' time, we start to get real close to breaking out. We'll see. All right? Just wanted to show this high-level consolidation in all 3 yields, 3 time frames, that is. Now, couple of things. I had a question about NBR. NBR is neighbors, industries, oils in the oil sector, oil service, up very strongly at 8.09, up 55 cents, up 7.25. This is really good action because that peak D had a down arrow because the MACD was negative, stochastic was negative, and now it's a good breakout. I'm calling this E for now. I don't see any reason why I should call it E/A. E can go to an F, can even go to a G, but boy, this is really good action. And the weekly chart has gone A, B, C, gray leg C, A, B, C. Wow, we might get an overlapping wave. All I can say is that the daily and weekly are very impressive. The monthly chart is improving for the first time. You're really getting 9-period moving average support. Got a long way to go. It's in the 16, 17 area that it broke out last time. Here it is halfway down at 8.09. Question is, what about it? What was the question? Question was, Basil, can you bless NBR for me? And I said, tissue. Okay, yes, I can bless it because you're a longer-term player. This is not, even though you're buying at the breakout, almost the breakout high here on the daily, I'm saying yes at 8.09. Why? Because I think the 760s is very strong support to the 740s. It might be time more than anything else that you utilize if you're buying it here and it suddenly stalls. But I think in your case, Peaky, I say yes, I'll bless it because you have a portfolio of oil service stocks, so this will just add to it. Next question was, DSX, well, I know DSX. What is DSX? Oh, Diana Shipping. Oh my, here's one that I was going to buy just recently. This one, there was actually another one that I liked a lot. And then I decided, you know, it's so dangerous in that shipping area. But we did get something that worked out for a little bit in the shipping A, B. I'm calling this C. Yes, I'm saying Diana Shipping trading at 3.85, up 15 cents. Not for the faint of heart. If you are really a conservative investor, just don't even look at this. But if you're a little bit more aggressive, it's trading at 386. You could nibble at between 382 and 378. And the reason why I say that is that the weekly chart has really been improving a lot. And I do think that this has upside potential. It might be short term, I don't know. But I think under 3.82, it's 386 right now. You have a chance of a retest of the high. That'll be a nice percentage gain. And if it goes to a leg D, a new leg D, instead of this being alternate count E, you can go to 4. That's a nice gain percentage-wise. Basil Chapman, Tiger Technicians Hour, and I'll be back. There are a bunch of things I need to, a couple of questions I got that were really important. I do want to look at the financials. A lot of people have been asking me about the financials. I'll be right back. The Dow's up 187, S&P's up 16. Tiger Technicians Hour. Love to take your calls at 877-927-6848.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Yes, so we're just on a short-term basis looking at the E-mini at 2676.75. It needs to hold 2674 over the next hour, otherwise it'll start to, if it pulls back under that, you could have some give back of gains over the last hour or so. That's kind of been the tendency. That was the tendency on Friday. Huge gains intraday, and then last hour just kind of gave back some. Still a big gain. And above that 2682 area is really important in my work. That was my target, actually. Let me just see if I can do that one more time here. Go to the 120-minute chart right here. 120, E-mini. Okay, here we go. So E-mini 120-minute chart was saying to subscribers, there's a left side, right side price time match at 2682.25, the high that on the 30th of April. We pulled back to 25.91, huge pullback, big, quick rally, a much quicker rally than the pullback. And the rally took us to a high today of 26.79s. So we're just 3 points off that high that was made. This is an area that could consolidate a little bit longer. Actually, it's a huge move. I wouldn't be surprised if there's some kind of a consolidation of the really 3 terrific turnaround days. And today was just a gap up, and now you've got to try to resolve that strength by having followed through buying. It's the 3rd day of that. So I think they could be a little bit tired. So let's just say the parameters to watch for the E-mini going overnight into tomorrow are 265 to 261, absolutely key support, and the 2682s, a break above that would be very positive. I don't expect that until tomorrow or Wednesday. Now, a couple of questions. I had a question about, so IYT, which is the iShares Transportation Average ETF. So this is a reason. So to answer the question that I keep getting here, a number of people sending the same question. I do believe we're going to do more testing of Dow 23,000s. I also believe that the higher up we go in this particular rally right now that started at turnaround Thursday, the higher that we go, the greater is the chance that it's going to take a whole series of bad news events to really break the 23,300, let's say, February low of the Dow. And to do that, what I'm looking at is the transportations are not actually complementing the rally in the Dow and the S&P and the Qs. So that's another reason where if the transportation average isn't leading on the way up, I'm suggesting to you XAL. There are a lot of areas within the transfers that are really mixed. The airline index, the ARCA, is down again today, down $1.656 at 106.36. Just not good action. And if you go, let me just use the old CSX as a proxy for strength in the rails. Yep, nice bounce, trying to make that down channel and cup formation at 60.57, it should retest the high of 61.50 that was made on the 20th of April. Not great action, but very good action. High-level consolidation, filled a little bit of the gap from the, the 18th? Yeah, the 18th of April, low was 59.19, gapping up from a high of 57.15, 2-point gap. That's full just a little bit to 58, was that round number? 57.97. So yeah, we're looking at that. So rails, and what was it? Is it Y? Allegheny Court Transportation. I think that's trucking. Yeah, and trucking is pulling back some, having a bit of a bounce. So that's another reason why I'm saying how we rotate through this whole corrective process is going to be very important. So the answer is yes, this is a rally. Yes, I'm calling it a counter-trend rally. No, I'm not calling it a rally to all-time highs again. That's just the way I'm looking at it here. I think we're in a very choppy sideways consolidation phase starting January the 26th, and we could continue a while longer. I just wondered, before we go to a break, I wanted to mention Dave White's got a webinar coming up on Wednesday, 16th. What's today? No, today's the 7th. Oh, it's next week. So it's next week. That's Weird Wally Wednesday, I think it is. And, you know, Dave's had some fabulous trades and options. So think about it. Go to the front page of TFN. If you're not used to options, you might even want to listen to the Think or Swim options show at 11 o'clock every day and get a sense of what they do. And then Dave is the one that can really give you some fabulous trades based on option exploration and his analysis of stocks that have heavy short interest or whatever is involved in what he's looking at. Best risk to reward is really what he does. So 27.41 up 14 cents in the XLF. Here's another reason why I can't be overly bullish, just specifically bullish. We actually have a position in one of the Dow stocks that I've followed for years and decades. And first time we've gotten into it on the long side for quite a while. I think it has a good chance to bounce, and then I think we'll have to get out. And if you're short, but we'll exit at a certain point. But at this stage, I think it's acting with. I want stocks that are complementing, doing the same as the Dow. I don't want them to be going against the Dow. So this is parallel movement. It is up. This particular stock today is up 1.29%. The Dow's up 0.59. So in fact, it's a bit of a leader. I prefer leadership than laggardship. Okay, now here's another question. The VIX index. Trading at 1493, down below 15%. Still very high. I mean, we were trading last year in the 10s, the 9s, even 8.56 was the low back the 27th of November. I'm just looking at this and saying, this is suggesting to me that there's an oversold condition being worked off to the upside. It is saying to me there is still quite heavy buying of insurance. And that buying of insurance is saying to me that there's a chance that we will get, based on the cycles that I look at, and I'm looking at a cycle of maybe 2 to 3 weeks. Might be a little longer, I'm not sure yet, of a spike into the 20s. So as long as there's a high-level consolidation above, in the teens, above 13, I'd actually say above 14. It's at 14.91 right now. But in the teens, that's saying there's a very high level of conservative, probably I should call it risk management. So people are buying the options, or they're buying the volatility index as some kind of insurance. And as long as that happens, I'm just saying, okay, that kind of limits the upside for now, but it doesn't say the upside is limited so that it can't go up. It says, no, we were very oversold going to last week. In fact, over the weekend, just from my quick observation of different things that I picked up either on the web or whatever. I think there was a lot of, maybe not so much selling, but just nervousness, general nervousness of not wanting to buy last week. So it was a big surprise Thursday, big surprise Friday. And the days where you throw your hands up and say, oh my, I lost such a good opportunity to buy. Now what do I do? The now what do I do is going to be here for another couple of days, because I think we've just made some kind of a shorter term high on the 120-minute chart. Probably has to pull back a little bit. We might not have a big rally again until maybe Wednesday. We'll see. So Dow's up 147, S&P's up 13. I'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, everyone. So in my opening call, my daily opening call, I call it daily because it comes out Saturday, Sunday, Monday, Tuesday, Wednesday. I do this as the Dow 120-minute chart. I showed that on Friday. I said good chance to be making a Chapman Wave 5 to the downside, and that we could be having a rally. Now we've gone 1, 2, 3. This was what I showed subscribers this morning, and what we're looking at is the 120-minute chart down, and on the right is with the MACD stochastic. See those nice turns to the upside, and then I give the parameters, and I say. In this case, if you're in plus 60s or more at 11:10 a.m., that's going to be positive for a good close. And I give all the parameters to watch for. And then in the daily chart, I did the same thing. If I can just find it. Nope, I can't find it in time. Yep, I can. There it is. Right That is the daily. Daily. That's the 120-minute chart. Oh, man. All right, it's there somewhere. Oh, this is the cues. I showed the cues, how while they're working, that they should rally up in the Chapman Wave inside wedge target line. The daily is improving a lot weekly. So this is in real time. Look, let's get out of that. Real time. This is that extension in the daily. It made an X to the bottom. This is a new leg, 1 to the upside. And the MACD cross positive. The stochastics improving a lot. It's at 36%, not great, but it's improving. But the on-balance volume is very good. So this is very good action so far. And here's that 120-minute chart. Chapman Wave 5 concluded, went to an X at the bottom. This is 1, 2, 3. We're in 4 down right now. There should be a 5 and then a little bit deeper consolidation. So far, everything's good. If the MACD cross positive, stochastic's good. So these are the things that I show subscribers, tell them exactly what to look for, at what time during the day, etc. Now, let's just do this quickly. A couple more questions came in. Boeing, let's just do this. Boeing, where am I going? Boeing. Boeing right now is trading up 6 at 341. See, as long as we've got some stocks that are rotating through their corrective process like Boeing is, that's saying to me that, yes, the upside could be limited, but it could be quite a nice move into later this week, maybe all of the week. And that was the question. Will we rally all week? I think we got a good chance to rally.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.